yes, all in all, it has been the geopolitical tensions, certain tariff threats, and of course, we have certain, we have the uncertainty related to the Q3 results, which is actually weighing down the sentiment and keeping the markets directionless as of now. But yes, but to talk more about markets and broadly where we are headed, let me quickly get on board with Anil Rego, who's the founder and fund manager at Right Horizons. Anil, good afternoon and wishing you a very happy new year. But if you look at the markets, it has been consolidating for the entire week. We have certain geopolitical tensions where we started off from the weekend itself. Then again, we had US president threatening with tariffs on countries who are still purchasing Russian crude. And then we have this uncertainty which is related to the Q3 earnings season. How are you watching the sentiment, and what is the kind of trade setup would you emphasize on right now?
Yeah, definitely at this point of time, you have a whole lot of headwinds. I think for a long time, we had the tariff news go into background, and that also has come back into the foreground. And I think market is still, waiting and watching to see, how it pans out. Of course, if, again, there's one more increase, that's also not going to help. But I think already at the current phase itself, it has become unviable in most cases wherever the tariffs are higher. So I'm assuming that, we already are seeing the impact as of now. So tariffs is definitely something to sort of wait and watch. Then obviously the geopolitical tensions in Venezuela and its compensating impact on oil prices. I think all of them are sort of coming together, and I think what market is keenly watching for is, how the results come out of most of the, key index companies.
Okay, all right. But would that mean that the FIs would be on the on the sideways, given that until and unless the entire geopolitical tensions gets resolved, because we don't just have the Venezuela tensions, we also have on the other side U.S. Secretary saying Marco Rubio that Denmark and U.S. plans to meet next week itself to discuss more about Greenland. So that could be another headwind for the markets going ahead. So do you believe that the current juncture would mean a little bit of a sideways trend for the FII flows itself? They could be a little nervous to make a comeback for the equity markets as of now. And of course, you can see the rupee also once again depreciating today.
Yes, I think the rupee is a reflection of, some of the volatility and the geopolitical concerns, as well as the, the expected proposed tariff impact on India, right? So I still believe that, other than the indirect impact of oil, I think geopolitical tensions are not so much of a concern. I don't think it should be so much for FIs as well. I think what they'll be bothered about is what can be the impact of if oil prices spike from here. So that is one, but I think the bigger one will still be, on the tariff impact on India. I think there was a bit of an expectation that, there will be a trade agreement in place. I think both governments have also come back and mentioned about it, and so there was some expectation there. Now, from this, going a step back, does definitely have its impact. So I think they will be a little bit more concerned about, how the tariff, was pan out. And I think they will also be, waiting and watching for, how the results season sort of pans out. I think a combination of those two, is what they will be waiting out for. But yes, definitely the sentiment would tend to be a little bit of a wait and watch, I think, even if they were ready to sort of come back and start, investing back into India.
Okay, got it. But Anil, I mean, the latest AMFI data, if you look at the equity flows, they have moderated in the month of December. So the complete conviction towards the equities hasn't returned. Do you think that the Q3 results can change things?
Yeah, I think so, because it was festival quarter, right? So to that extent, I'm hoping that the results should, be reasonably good. Okay, and especially the consumer-oriented ones, I think the results should see the benefit of the festival season. So that is, I think, lesser of an issue. I think beyond consumer, I think we will have to watch, and especially including the banking side is private sector banks. I think everybody will be keenly watching, what is happening, likely to happen out there.
Okay, okay, got it. Anil, but if we go and relook at the Amphi data, it's been the month for the flexi caps once again, because instead of parking money on one sector or one theme, investors have once again favored flexi caps as of now. So, what's your view, and do you think the trend is going to remain the same for the upcoming months?
Yes, so coming back to mutual fund flows, I think yes, definitely. At a time like this, people are a little cautious about mid and small because they have also corrected significantly. So I think flexi is some place where possibly some of that would have shifted. I still think the weakness is not as pronounced. So but it sort of indicates sentiment is not at its best. Okay, because it's likely that some of these investors also are investing in stocks themselves, and or have invested in some mid caps, and those are showing negative. So there will be some bit of cautious type of sentiment out there. So I think uh, that is definitely something which would be there, but I'm not expecting it to really turn around and change. And because if that happens, then what we should be bothered about? If it's a little bit of a pause for a period of time or a little bit of a going slow, I think it's fine because they're already contracted SIPs which are sort of winning, and those should give you a bit of a breather. But yes, sentiment is likely get impacted because of the volatility that retail investors would have seen.
Okay, okay, all right. Anil, what about the small and mid cap funds? Would this continue to see moderation in the upcoming months, given that the earnings could be a little on a weakish side for them?
Yes, so I think the earnings growth of the mid caps probably should sustain and maintain. One would like to keenly watch out on the small cap side. In fact, our view was it would not come back, or it's unlikely to come back till possibly this quarter. Okay, so I think that we'll have to sort of wait and watch for. But I see I don't see a slowdown because relatively to large caps, still mid and small caps, earnings are much stronger. So one needs to see whether it comes off, and personally, our view is that we don't expect that to come off, too much.
Okay, okay, got it. But last month we saw a little bit of a cool off in gold ETF flows, but once again the flows have returned record in December. What are you making of the sentiment, given that the gold prices already are hovering around that record high levels?
Yeah, so I think what happens is, at the first correction, typically, investors are bottom fishing. Okay, till I think where they stop is where there's a sort of a large, correction out there. So I think investors would have been bottom fishing and come back. There was a lot of noise around gold being also overvalued and stuff. So that is something which would have been at the in their perspective. So I think from here we'll probably see gold also sort of make a comeback. There is also this volatility on the equity side and global concerns. So I think investors also will be looking to see whether they want to hedge their bets by putting some money into gold. So yes, so gold also being looking at geopolitical tensions globally, right? Should sort of get a bit of a booster. So from all of those, I think in the short term, you probably can expect inflows also a little bit more into gold. And while there's all of this uncertainty, you'll probably see gold also do well.
Okay, all right. Coming back to earnings, Anil, which sector are you watching out for December quarter? We'll be first having IT rolling out its numbers, but any sectoral or thematic pocket that you're watching out for this third quarter?
Yeah, so definitely one is watching out for, I think, the banking, like I said. Okay, so one wants to see whether, there is sort of sustained meeting, especially, I think, we'll be sort of keenly watching on the private bank side. I think the consumer-oriented sectors also, like I mentioned, thanks to the festival season, one expects consumption-oriented and discretionary and organized retail to sort of do well. Okay, IT services, etc. We probably, bit of a neutral view out there. And I think from, the recent news around the potential opening up of, to China, right, is something that I want to, just watch out for, export heavy industries and the tariffs as well as, some of the uh, infrastructure and uh, certain manufacturing companies which could sort of also get impacted by, cheaper movements in from China.
Okay, all right, got it. What about the IT stocks? I mean, the large cap IT names clearly taking a breather before we head to the Q3 results this week. Q3 is usually a seasonally weak quarter, but do you believe that given the kind of valuation comfort everyone was looking for, does that argument still hold going ahead?
No, I think it will still hold, but the sector did pretty well. So when you see some of this global news and you see, especially with respect to the US, etc., there's always a fear that will there be could something happen with respect to IT? Okay, so that's definitely, where IT and pharma as well are ones to sort of be a little watchful of. But I personally, I don't think that again we should see anything negative with respect to IT, and possibly we should see these coming back, especially because valuations are comfortable, and I just think that it's a little bit of a profit booking as well for investors who also are seeing negative impacts on other sectors, right? So they're saying, okay, let me take some money out and let me be a little cautious out here.
Okay, got it. Any investing strategies that you would say investors to adopt as of now? Because fairly it's a range-bound market. Should they remain on the sidelines or start accumulating at the current levels?
Yeah, so I would do in a phased manner right through this quarter. So maybe a little bit of a wait and watch for a few days to see, does something escalate around, the trade war especially. And because if that happens, there will be some short-term impact. But I think, uh, assuming that, you go through like maybe a week or so, then I would suggest in a phased manner and start maybe slowly because our view is that we think that even mid and small caps should have come back. Small caps have seen reasonable carnage, especially for lower market cap type of companies. Okay, where in some cases, in the worst case, 50% plus type of falls they've seen. So from that standpoint, being closer to 2018 mid cap and small cap fall, one believes that we sort of closer to the end there. So sometime our expectation is during this quarter, hopefully we will bottom out. So phased approach is something to look at because it's very difficult to predict when exactly the change happens, right? So, watchful and I think cautiously optimistic is what I would say our views.
Okay, got it, got it. All right. On that note, we have to let you go, Anil. But thank you so much for your time and joining us. Well, that's all we have for this edition of Closing Bell.